Great to have you with us. I just ran through the highlights of today's numbers. Characterize the quarter for us. It looks like you've seen a bit of a recovery.
Yes, good morning. I can confirm that our third quarter was a positive quarter, a good quarter. I think the best measure to look to is the free cash flow that was nearly at the previous year level, with 330 something million. And it's a good proof that our tactical measures to manage working capital, to be strict on capex, but also the margin improvement, that start to show some impact, and that is good for us.
And from a regional perspective, looking at the year so far, there seems to be a lot of divergence, and one would expect this given the different recoveries in different parts of the world. But the Greater China region showing particular strength, but the rest of the world not so much. Break down for us the activity that you've seen in the most recent quarter and what you're looking at for the remainder of the year.
Well, as you said, the third quarter was clearly driven by the continuous recovery in China, strong demand, in particular in the auto sector, but also in the industrial businesses that we have. Think about the wind, the renewable energy business there. So that was strong, that helped us. But I can also say that in the third quarter, the Americas performed quite well. Also there, auto demand is improving. And it looks like that what we see from the first indications for October and also from November, that trend continues into the fourth quarter. Yes, the crisis is clearly not over. We need to stay tuned, but there is an underlying positive trend that supports the recovery. However, we need to remain cautious, and that's also why the guidance that we have given is conservative, so that we can also cover the uncertainty that still sits within the system.
Klaus, which raises some interesting questions about the decisions that you took back in September and announced, the loss of nearly 4,500 jobs and the intention to close several operations in Germany. Are you still intending to follow through with all of those plans at this point, given that we now see perhaps the opportunity of a vaccine bringing something like normality in the middle of 2021?
Well, we always said we need to distinguish between the tactical measures to cope with a crisis and the more structural measures that we want to put in place to make the company even stronger. And therefore, we will 100% follow through with our structural measures. As you said, we announced them on the beginning of September. They come with a restructuring provision of around 700 million, of which we have booked most of the money in the third quarter, but there's a little bit more to come in Q4. We are targeting an improvement on the cost side and the profitability side of 250 to 300 million. These measures are indispensable. We will definitely follow on with them, and they are there to make the company stronger. They're there to be able to invest into the future. There's a lot of opportunities here coming from the development, and that's why we will definitely continue with these structural measures.
And can you tell us a little bit more about the best growth drivers at the moment in the business? E-mobility for a while has looked very interesting. How is that evolving, and what else is doing well at the moment?
Well, the e-mobility business is clearly one of our key growth areas for the future. We want to be a champion in that area. We have invested a lot. We are seeing that our order book is growing. There's a lot of demand on new technology in that area. And we are lucky because we're able to fund this growth plans by the strong traditional core business we have. And also in that business, we see growth at the moment. But the most important is that we make the company robust for the future and are present in these future trends.
In terms of the future, looking here at the guidance that you provided, expecting to generate full-year EBIT margin of 4.5% to 5.5% in 2020. You've made a lot of progress this quarter. How should we think about the margin outlook moving forward? Is that the type of margin level we should expect for the coming years?
Well, that is a guidance for the rest of the year 2020. It's a little bit unusual that this happens during the year, but it's a fact that we had this crisis. We reset the guidance just yesterday when we finalized the accounts. And I think it's with the improvements that we saw in the third quarter, but also with the first indications we get from October, we feel that this is a responsible way to inform the capital markets about what we're expecting for the rest of the year. The midterm targets will be provided on our Capital Markets Day on the 18th of November. And I cannot say at the moment what they will be, because that's something for the Capital Markets Day.